case study with the split short and no fast and slow signal. So the case study was about taking an entry on a fast signal, and the fast signal was this 15-minute market structure break. We turned on the regression long. From there, we got an entry specifically right around here when the bulls started to put in a stacked imbalance on the order flow of the delta, and from there it continued to sell off. The expectation was it was going to come and retest this area, but it seems like the bears are strong here. So we're just kind of waiting for a 5-minute market structure break to the upside to get out of the position. Until that breaks, we will not be getting out or doing anything. So, and I think we got maybe a couple more minutes on the day. I don't know. I'm thinking about dumping the position really soon. I think the apex hours is 4:59, and the market closes really soon. We're under the daily and weekly open, so it makes sense to just dump right now for the day. So I'm going to close the trade. So that puts us at roughly $100 per 2 accounts. We're going to close.
Order filled.
And that's it. So $200 up on the day, not bad for a quick day trade. I mean, it was like within the last hour or two that we took it, and most of the day was trending up, and that's the case study. The case study was the fast. We split up the 4 accounts that we have, which is the 26th through the 29th, the Apex accounts, and we split up half and half. Half will go to the signal, to slow signals. So we're waiting for this 4-hour market structure break to break before we'll get involved with the full size of the full accounts. So the idea is for increasing degree of confidence, we're looking for slower signals to get involved the rest of the accounts. Until that happens, we're dependent on the fast signals, and which is okay. It's just it's a little more risky. So to limit our risk, instead of if we were to make a bad trade, instead of losing 100 per account, we're losing only 200 per account and that's making the risk small. But once we get more increasing confidence of a trend, we will throw behind the full account for position sizing and for profits. So then we make profits larger and losses smaller, and then on top of that, we could throw more confidence in throwing bigger position sizing after break evens. So, but I think that's pretty much it for today. As far as like a case study, right now we're in some chop, and if we were to just kind of take a look here on the daily breaker, we're in the thick of it. Here's the daily breaker. So we're in the thick of it, and the daily breaker is really choppy, and that's one of the things I don't like about the daily breaker is just how choppy it is, and I think it's going to come back. I mean, we're above the 4-hour market structure break. Let's see, 15-minute. I really don't need this box. If I can get rid of this box. Okay, I'm gonna have to go in the objects. Hope that's it. Got it. So we're waiting for this 4-hour order block, bullish order block, to break to the downside before we throw our full weight. We are also looking for a retest, and from there we're gonna short again with the fast signal for half the accounts, and we're gonna see how things go. Like, this is kind of our assumed target that things will turn around. It's not clear yet. We're gonna look at stock charts. We're expecting really soon some kind of definitive. So we take a look here at the institutional bias. So we're looking here, and we want that, and we want that, and we want that. So we're getting really short on the bias here. We can see the lines about to cross the red line. So the institutions are getting really bearish. That's kind of the opposite of what people are thinking. You know, they're thinking, oh my gosh, it's going to start making new highs. I better get in before it gets away from me. And that's the reason why we look at what the institutions are doing, because I would argue that they control the market. You know, they got a lot of money, or they handle clients' money, and they're able to do a lot with that. And are they always right? No, but probability-wise, yes. And then, according to the timing solutions, we're also had a decision point of most likely rolling over as one of the two possible places. Technically, we already rolled over last year in like November, December, which we were able to catch with timing solutions, and that was the top. So as far as we know, market structure hasn't really significantly broken to the upside. It's significantly broken to the downside. Now we're kind of waiting for the S&P 500 to develop some kind of weekly bullish order block, so then we can break it. And so far, there hasn't been any. Maybe if we were to do this. Nope, nothing. Yeah, no order block yet. But it doesn't look bad. Well, we got nice retest here. Would be really, and this looks like it's near the yearly open. That would spell the death of this. And then we got a nice area. So this is a nested breaker situation. Ping pong. We got a ping pong situation. And it looks like until we hit like Powell speaking and the CPI, this is gonna be hairy until it resolves. And we're assuming on the Covey portfolio that that's it. That this is it. This is the deviation. We'll get back under in a consolidation. CPI hits, and we continue ping pong, and then or Powell speaks, and then when his CPI hits, and then I don't know what's going to happen next. But we're expecting that's it. That's the top right there. And we look at timing solutions. The case is that all the inversions, the peaks that we see, is it. And there's one around the time the CPI release. Right there. Right there. And they're all in consensus. So just because on these waves that it's the highest peak doesn't mean that it's the top. That's the problem. But that's why we're also keeping our mind open that this is a possible peak area, like around here, 1st of February, because that's when the actual Fed hike meeting is. But if we were to just assume that the market is forward looking and they would anticipate the Fed meeting, yeah, obviously Powell's words will carry over to that meeting, but we're assuming that the market's going to take its chance on putting in what it thinks is going to happen around that time. And it makes sense risk to reward wise to position short. So that's kind of like all of the if I was building a case for the short side, one, institution is short. Two, the math cycles are saying it's time for a turn. Three, we got the news events of Powell and also the CPI release. And Powell, with rate hikes, is typically hawkish. He wants things to go down, 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 no matter what. And the next Fed meeting for hiking rates is February. So if the market is forward-looking, it would anticipate that and price it in. And obviously, no one knows when it is really priced in. I hate that term, priced in, because it's so subjective. No one has an objective measure of the priced in measurement. But that's pretty much it. We are, and that's why we're approaching the probabilities the way they are, with half of our account taking a faster signal and the other half waiting for a slower signal, is just because there's a probability that it's pricing in. It's just we don't know. But the best way of knowing is actually developing a system to where you can dance around that idea of or that the confidence of the price sentiment. So we're waiting and seeing, and we're hoping that this is the 4-hour breaker that we need to see. Sooner or later, this box is going to move up here. It's going to break, and then I think with the daily breaker that we have here, I don't think we're going to need 2 market structure breaks to the downside. I think we're only going to need 1. So that's like the good news. Like when we were here consolidating, we had 1 market. We had like 2. We had 2 H4 market structure breaks to the downside and 2 to the upside, and it was terrible until this one over here. I think that was like the 3rd. I'm not 100% sure. Maybe it was 2 exactly through the whole top. But it's not fun going through the swing failure pattern, and I think we've pretty much completed it. We got back. We put in the left shoulder, put in the head, put in the right shoulder. We're into the daily breaker to the down bearish breaker, and it just makes sense that this is the one and only H4 order block that we need to break to the downside, and once that breaks, it's toast. And we're putting in a mini deviation swing failure pattern, head and shoulders, and I don't see a reason why we would need 2 4-hour breakers to the downside. It just makes sense that we would only need 1. But anyways, that's it. Go into plan. Once this 4-hour breaker here breaks on oil, I'm thinking about maybe adding more. I'm not 100% sure. What's weird is oil got a 4-hour breaker today, right here. We came back for a retest. Looks like a huge deviation. Deviation meaning a trap. So if this invalidation for the bears are here, so I don't know if we're going to come up and test this naked breaker, but it's kind of questionable now. So invalidation for the bears here, bullish up here until we reach this target. So I mean, this is a nested breaker situation, and that's not fun. It's not worth trading. You're better off just waiting, just because they're just so nasty, unpredictable, It's almost like you're dealing with an addict. Just there's another nested breaker. Thank goodness the one we're trading doesn't have a nested breaker. Invalidation for the bears here. Invalidation for the bulls here. But yeah, like oil, not good to trade right now. If you're buy and hold, I'm already positioned short. Gold looking like it's getting ready to roll over. About time. We hit this weekly resistance here. Oh, let's see if I can get that fly. Hit that weekly resistance there. Wicked into it, came back below, and most likely looking to come back probably into this monthly bullish order block. That's where I would buy, is into this monthly bullish order block. Buying up here was too early. I could just tell. I'm like, it's too early to buy up there. But when we get closer below 1600, oh yeah, it's looking juicy below 1600. And then Bitcoin about to roll over so whenever we get a rollover on I don't know, I don't think I'm gonna touch the crypto coins. We're already holding under, and we already got big size on Covey, so that's the problem. We got big size on Covey, and we're on leveraged ETFs, and it just makes sense that, and I think we got a bigger position size than everybody else. It's not like we need to collect as much alpha as we can. We just need to have more than the next person, and we have a high degree amount of risk on the position size, 100% on the UVXY, the VIX. We got 40% on DRIP, on I think it's a 2x bear short on oil. We got 40% on 3x short on real estate, SRS, and then we got 20% weighting on the coins, negative 20% on the coins, and then we got minus 40% on Chevron. So we haven't checked on Chevron to see what's going on there. We could. Let me see if I can pull it up. So just make sure that the trades are closed. There's the profit. No trades are open. Let's double check here. Positions, 0. Okay. Before market closes. So that's a good deal. Alright, so there's Chevron. And we want... Maybe we can get a faster signal. I don't know. That's it. I like the ExxonMobil. ExxonMobil looks just like Chevron, but we have better cues. I mean, we already have this 4-hour order block. I almost was really particular about it, but now I'm like, ExxonMobil looks exactly like Chevron. Like, look at the two; they look almost exactly alike. It's just this one is giving us a signal of an order block that can break, and this is what we want. We want something actionable, so this is what we're going to use. And so that means we can get rid of this broker and save some RAM. But looking good on almost all of our plays. Looks like this shrunk back for continuation. I don't know. I think we're going to have to hold off on trading until maybe after CPI is done. Before getting involved. It just seems like it's going to be really difficult. So that's pretty much almost the conclusion. We'll kind of have to make an assessment after every daily close, but and just kind of establish our range. One thing we're also keeping an eye on is our DBT Momo top signal. So this is saying we haven't put in the top. So I'm expecting some kind of retest to where we get kind of close to this line, and that's when it would probably put in the top signal. And that makes sense because we got a 15-minute naked breaker here. And that's kind of what makes me think we're going to go back into it. Got it. So we will be watching for it to turn yellow, and that to be it. So that's pretty much it over here. I don't know what else to say other than we need time to be able to save more content.